Yo, good morning, everyone, and welcome to the Morning Market Report. It's Tuesday. It's the 29th of July. We got a couple of things going on today. Jolt's job reports dropping right now. 1 minute ago, they dropped. We are seeing a little sell-off in the markets, but let's talk about this level that today on the show, that $1 billion in short liquidations could be incoming at a price level. We're going to break that down for you. Talk about what's going on tomorrow with the White House, another crypto day. Break that down, show you guys that data, and then take a look at what's going on the rest of the week, because tomorrow starts a really busy day for the macro. Shout out to everybody in the chat. Shout out to Alexandra G. Before we even got started today, she's throwing out memberships at people. So shout out to Alexandra G, the mod queen. We appreciate you, lady. Let's go ahead and just roll this in. Let's get it going. Let's start breaking all this down, and let's see where we're at in the markets today, guys. You guys know what time it is. Class in session. Let's get it. All right, everyone. Welcome. Appreciate everyone coming in today. Osaka Tano, Osoka Tano. I'm going to get that right one of these days. Appreciate you being here. Nice to see you. Gen X Fairy Godmother's in here with us. Kyle N saying good morning. Baba Yaz is in here. We got JB Hulk Smash in here. Baba Yaz, I appreciate you, man. Bedridden. We need to talk soon, bro. Haven't talked to you in a while. We used to call each other on Discord all the time, and I haven't done that lately. So, Crypto Coin Mindset, Keith, appreciate you being here, bro. I was looking to see if you had a show today, and it did not look like you had one. So, let me know if that is the case or not. And between the aisles, got one of the memberships there. Robert Mulligan, I see you, and Alexander G. Tesla Pilot. King Andrew 900. There we go. He also got one of those in the Michael B. Looks like some lurkers. Picked those up. Dylan VA, I see you there also. Appreciate everyone here, but you know who I really appreciate? It's my co-host who's here every single day, without fail, twice a day, and will never leave me. Loyal to the end, my Mexican Superman friend, OC Guy. What's up, bro? How you doing, man?
Oh man, this is getting to my nerves.
Emotional damage.
With my own skills, I'm starting to doubt myself. But I'm doing fantastic. A little tired, not gonna lie, because yesterday I went to bed like 4 a.m. So four. I just have 4 hours of sleep, and that is because it was totally worth it. I was watching the Day of the Jackal series, and I just had to finish it up, man. It is a fantastic TV series. Let me know. Have you seen that? Have you watched
I have
that?
not. I have not, but I will tell you a couple things that I've watched recently that were really good. Let me get my Piper Academy up here. There we go. Perfect. I make sure that the stream's good and smash my own like button. If you haven't done so yet, smash the like. I just did. So a couple things that I watched recently on TV. One was Life on Planet Earth, narrated by Morgan Freeman. Very good. I really feel like, though, that they jumped like a 200 or 1 million year period. That was pretty important. Actually, not even a 1 million year. Yeah, about a million year, because it goes from the freeze, right? And then all of the mammoths dying off. You know, the woolly mammoth, the mammoth sloth, the mammoth beaver, the mammoth otter, all the different things that were out there, right? It goes from that into the rise of the mammals, right? And then all of a sudden you got some native looking hunter with clothes on running around with a spear, and I'm like, you kind of skipped about a million years of evolution there. But I was intrigued to find out that, I don't know if you know this or not. Let me know if I'm just dumb in the chat, or if you guys knew this or not. Modern man, meaning upright bipedal Homo sapien, 300,000 years. That's all we've been around. A blink of an eye, in the grand scheme of all things Earth timeline, right? So when you consider that dinosaurs were around for 150 million years before the meteor wiped them out, they were around for 150 million years. 300,000 years. That's all that modern man has been on Earth. It's It's a little
And
crazy.
now
It's a
you're
little
coming
crazy.
back and hunchman looking at your cell phone, like back at that, like a T-Rex.
Yeah. El Genio Super Hombre Mexicano. Use Google Translation. Gen X Fairy Godmother. Appreciate you. Let's go get them up here. Let's see who all we got in here joining us now. BC Port Corp joined us in here. Modern Man is young. Yes, absolutely. Modern Man is very young. Yeah, they were talking about 6 extinction events that have taken place. Ninja Glock, I see you were there also, man. Appreciate you being here. They were talking about 6 extinction events. We've had 5 like that have wiped out 80% of all life on Earth. 5 of them since the beginning of time. So hey, get your
Crypto
Bitcoin.
winter
Get
was
your
not one of those.
what's
Just
that?
so you guys know. A crypto winter was not one
Crypto
of
winter was one of them. I don't think that's true, OC. I don't think that's true at all. But okay, we'll go with it. I like it. Crypto winter was one of those. Good Lord. Why am I so red today? I am super red. I don't know why I'm this red on here. Let me fix a little bit of coloration. There we go. There we go. Perfect. Okay. The other one that I've been watching, that I just started watching some Netflix series, and it's called Building the Band. So it's kind of like The Voice, but they're building like boy bands and girl bands, mixed bands. But like early in, I was able to key on this girl and this guy, and I was like, they need to get together. That is the next Will I Am and Fergie right there. So I don't know. It's a pretty good series. I'm digging it so far. My wife and I started watching it, so it's cool to see Netflix come out with a decent series. So no, I'm not sunburnt. I am a little sunburnt, but not that sunburnt. I don't know what's going on. It's probably all the red over here on the screen that I'm seeing, but let's go ahead and jump in on Bitcoin, OC. Let's talk about that. I am seeing a lot of red on the charts right now, but when I look at the markets, we do have a nice little opportunity here, I think. Yesterday we called out an ETH long, and man, did it freaking jump off of there. So let's go check out Bitcoin though. We'll come back, check out the news. We'll look at this JOLTS job openings. I will tell you, it's worse than they thought it would be. There you go. So OC, what we got on the Bitcoin chart?
Absolutely. First, before we jump to Bitcoin, I just had a little bit of a cake shorty here going on. Don't ask me why, but this is what is going on. Let's go back to Bitcoin really quickly. Here it is, BTC. Let's go get it right in here. All right. So let's just wait. I don't know where these lines come from. Man, that's really annoying. They just go away just like that. Really weird. All right. So let's just wait for it to load for a second. There we go. We're still in the same place that we were yesterday. We're not going anywhere, as you guys might expect. Nonetheless, we're still ranging. I think that at this point it's safe to say that this triangle is basically already gone, and we can move into the next setup, which is absolutely the Wyckoff range right there. So let me just get rid of this. And by the way, we've been looking at that range for a little while, right? Remember, if we come back in here, you have noticed that we have that range both markup with a support and a resistance in here, and even colorized in red. Let's see, where is it? Right here. All right, sorry about that. So other than that, we're still ranging. Let me go back to a more decent chart, which is going to be, I believe, this one. And once again, I know where those lines come from. I found a lot about those later. But we're still within the range. We haven't broke the range, and well, I mean, we can be expecting that couple of icons start moving around. And something important that I've been noticing, it is the Bitcoin dominance. I mean, despite Bitcoin not moving really to anywhere, we start seeing the Bitcoin popping out of this trend line, right? I mean, if you really zoom out on the 4 hours, it's not like a big deal so far, but we're still moving to the upside right now. We're getting above the zero line, which tells me that most likely we are going to get somewhere around 62.46, sorry, percent back to the dynamic reactor to then maybe bounce back down somewhere around by the way, if we get that to 61.91. So what I'm looking for is, for example, this area as resistance, a breakthrough, a come back down, and then we'll need to make our analysis to see if we're going to be pushing through, because most likely dynamic reactor is going to catch up to it and either bounce back down or break to the upside. All right. But so far, we're seeing that rotation back to capital, which tells me that if we keep having this, once we start breaking through the 0 line, most likely Bitcoin is going to start moving to the upside. So far, so good. Nothing really serious. We've been bunching up at the top of the range. And let me remind you guys, I don't know if I have it drawn here. Let me see. Maybe I had it here. Not really, but whatever. Let's just redraw it really quickly. Remember that when we have a range like this, let's go the same size. All right. It doesn't matter where we're coming from. It doesn't matter if we're coming from the top. It doesn't matter if we're coming from the bottom. And we start ranging, and then out of nowhere, we start doing this. This usually indicates that we're going to have a breakout, a positive breakout. So far, that's exactly what we're seeing right now. So we have the range like this. All right. And then, as you can see, we're starting right now to start bunching up at the top, as well as we have our oscillator at the top. Don't let it deceive you so far. Remember, we don't have a confirmed breakout so far, so this is only speculation. Remember that I like to just measure those ranges as 50-50 breakouts. In the meantime, going back to the daily, let's remember, just so you don't lose the eye, you keep the eye on the ball. All right, we can still come out to the 50% retracement on the latest move, which first will be getting us somewhere around 110. And if we go to the 1/3 retracement, or the 33% retracement, we'll be talking about 113. So we can still have that sweep of the lows on daily and still be very, very bullish. So and look at how that oscillator is coming back down, almost getting ready to hit that 0 line. And look at your number 10 on your consolidation score. We finally have seen a unicorn right now. Remember, we almost never have that number 10. So that means that we're highly consolidating. And yes, of course, we know it, but it also tells you that we're at the end of the consolidation. So where is it going to be breaking out? If you ask me, I speculate, or I think that we're going to have a very nice sweep of the lows somewhere around 113, and then having that very nice coming back down, acceptance to the range, and then continuation to the upside. But so far, that has not been defined. And remember, in fact, let's add it right here. So we have a perspective, 113, 114, and then another one right at 110. Or is it 110, 600? So far, so good. We're in the same place. Possible pullback to the downside.
Yep. A 10 on the prime score. Holy balls. I just had to drop it in there. So, all right, OC, let's go ahead and jump over to the news. Let's take a look at what those liquidation levels are that you were talking about. Because I got that, that handy dandy chart. We'll look at that. But I do want to get into the news articles and headlines. Let's go over there. Let's go. You think we're going to 113 today? Probably not. I'll show you why. Let's go. All right, guys. Over to the news. Let's check out the metrics here from Into the Cryptoverse. Right now, crypto market cap is sitting at $3.874 trillion. Trend line on that is at $4.128 trillion. We are currently undervalued about 6.15%. Still fighting against that median line there, guys. And you can see it's just, I'll bring it up here and show it to you. We're just sitting right beneath it. We actually tapped it a little bit, it looks like. Let me see here. Almost tapped it there on the 21st of July, but it is still, we're still sitting beneath that. So once we break that, then we've got, a bull run going on here pretty hard. Looking at the current risk levels for Bitcoin, we're sitting at 58.4% risk band. And then look at the dominance. Dominance holding strong, 60.6% with stable coins. Without the stable coins, 64.84%. Bitcoin dominance finding that support pretty much where OC and I said, look, this is a range of support. We're getting a nice little bounce there. Let's go jump over to Fear and Greed. Flashbang. See, now I don't look so red. See, it's the white light, red light, white light. Bitcoin Fear and Greed currently sitting at 73 right now. We're in greed. Current price, I think we're a little bit below that now. U.S. markets. Let's talk about this. Dow Jones is flat, slightly down 0.06%. S&P is sitting just up 0.16%, and the NASDAQ up 0.25%, losing that too. Struggle bus. Steve Ruggles, as Alex O would say, going on here in the stock market. Russell 2K sitting up about 0.25%, and the VIX is just chilled. Like, the volatility is almost non-existent on the stock market right now, guys, which is interesting to see it suppressed like that with everything that we're seeing on the economy, the macro side. Looking at Asia markets overnight was a mixed bag. Nifty 50, ASX, and the Shanghai all green, Nikkei and HSI all in the red. Europe overall green across the board. Bonds market. Where is my bonds market? Look, they're doing it again to us. OC. There's no US here, but it was down slightly this morning. Just so you guys know, it was in the red. Let me go here. I think I can see it there. Yeah, there you go. US 10-year 4.37 down just slightly. Let's look at oil. Oil is at 67.51 a barrel right now, moving back in towards that $70 range. Natural gas is up. Brent is up. Gold is also up. It's holding that $3,300 level. It is up about 0.14%. Silver's down just slightly, 0.07 at $38 an ounce. Copper and platinum both to the upside. OC, palladium is taking a dump. You're right today. Palladium is taking the loss today. There you go. You get every now and then you get an attaboy. Let's go jump over here. Look at the liquidations, guys. Last 24 hours, 165,233 traders got liquidated. It just changed. Total liquidations coming in at $450 million in the past 24 hours. Largest single liquidation order happened on OKX. It was for Ethereum for $1.9 million on a single trade. Where are we at with alt season? Is it here yet? Unfortunately, it is not. We're still sitting at an index score of 47, meaning we are far beneath that 71 line. That's the blue box here. This is alt season, guys. We're not in alt season. And when we told you guys, we put this out last week. I don't think that we're in alt season yet. Everyone was talking hashtag alt season, and I'm like, no, not yet. Calm down. Calm down. Let's go take a look at the top 30 peak indicators for the bull market. Right now, all of them, all 30, none of them have hit. They're all in not hit so far. The closest one to hitting right now is Bitcoin dominance. It's at 92.9%. And I don't think there's anything higher than that on here. Nope, Bitcoin dominance, 92.96% is the highest one right now, and it's not even fired yet either. So overall, right now, not seeing any top side indicators coming in. Doesn't mean that they won't hit this year. This is just based on historicals, right? And so we have to assume that there's a likelihood that it follows history. Doesn't have to. We could have a top come in and it never fired a single one. It's just the way it is. Calm your, yes, not that. Calm your nipples. It's not alt season yet. So looking at crypto bubbles here, this is all the red that was making me very red on the screen because this was my entire screen over here. That is the daily right now. You look at Fcoin down 18.2%, Bonk down 14.7. People that are jumping in on these meme coins going, here we go. Here we go. Papa G said, I am now a Chart Prime guy. Bada bing, baby. Let's go. Welcome to the Chart Prime crew there, Papa G. Make sure you go into the Discord. 28 live classes a month that they do, man. Live education with Alex O, OC, and myself. So you get a lot of education over there with Chart Prime. Let's talk about what's going on in the market right now. Ethereum and Bitcoin on the daily, flat. On the hourly, it's giving back any gains that were there on the daily, right? Bitcoin currently sitting at 118,266. Ethereum holding that $3,800 level again. But XRP down. BNB down. Like you can just see everyone that's jumping in on these massive alt trades thinking this is it. They're about to get rich. Not getting, why did my camera get so, there we go, are not getting these levels that they thought they would get. And everyone just needs to take a deep breath. Take a deep breath. That's what you need to do. Tron up 4.3%. Cardano's down 2.9%, 78.6 cents. Hyperliquid was down 2.2. Look at SWE down 7.8% at $3.80. What else is there? Avalanche giving back a lot of those gains that I had on the run up yesterday, down 7.1% on the daily, down 1.6 on the weekly. So it gave back some of those gains. Litecoin slightly down. Leo token, the only one that's really doing decent today. Why? It's a native token. And we talked about those when markets are doing sell off, they go back to the native token. And then Toncoin down 2.7, wrapping out that top 20. So overall, besides Tron and Leo, we are seeing a lot of sell offs going on right now. Markets fluctuating back and forth. Let's talk about what happened with job numbers today. We did get our trade balances and all that good stuff, right? But let's look at the JOLTS job opening. This was the big one today. Came out here right at the top of the hour, 20 minutes ago. We were at 7.71 million jobs, job openings. Consensus and forecast was that it would come in at 7.5 million. We came in at 7.43 million. So we came in worse than the expectations were. Overall, what we're seeing here with this is that we are very likely, this is not enough. This is not enough of job openings a miss on job openings for the Fed Reserve to say, let's cut rates, right? We want to see weakening of the labor market in order for them to cut rates, which AKA means quantitative easing, which means liquidity, which means pumping markets. But this is not enough, in my opinion. Let's go jump in and see what they actually said here. The number of job openings in the U.S. fell by 275,000 to 7.437 million in June, below the market expectation of 7.55. The number of job openings decreased in accommodation and food services, 308,000, probably because people aren't going out to eat as much anymore. So healthcare and social assistance, 244,000. Finance and insurance, 142,000, and the number of job openings increased in retail trade, information, state and local government, and education, which makes sense because they went back into the school year. So that school year has kicked back up, and that they usually got to hire for that. Regarding regional distribution, job openings fell in the Northeast by 106,000, the South 130,000, Midwest 149,000. Meanwhile, hires and total separations were little changed at 5.2 million and 5.1 million. So with separations, quits, 3.1 million were little changed, while layoffs and discharged were unchanged completely. So we're not really seeing a weakening. And that's what I was talking about. Yes, the job openings may have dropped a little bit, but we're not seeing layoffs. We're not seeing people get fired. We're not seeing a huge flux of showing of this weakness, right? So with that, what that means is there's no threat to the Fed Reserve to force them to cut rates. So, flashbang right there. Looking here at July 30th, this is going to be tomorrow's FOMC, and you can see we're currently sitting at a 96.9% chance of no rate cut. Let's look at September now and see if it's changed at all. September, we have a 65% chance of a rate cut. And I don't know that we get one in September even. I think October's our first one, and that one's looking like an 81.8% chance right now. So tomorrow, it'll be interesting to see how September changes with July out of the way, because once these numbers flush out, they're no longer in the algorithm for the following months. And so it'd be interesting to see on the 1st, or the 31st, I should say, what we're looking like for September. Tomorrow, guys, White House to release, and we'll go ahead and bring OC up on this because we'll go into some articles. OC, check it out, bro. White House to release crypto policy report on July 30th. This is tomorrow. XRP and Bitcoin are in the focus. On 30 July, White House will unveil its first major crypto policy report, overhauling Biden-era rules, clarifying the SEC versus CFTC rules, introducing stablecoin licensing, and streamlining agency oversight under the Genius Act. The mood in the markets is cautious as investors brace for a packed week. The crypto world is watching closely as the White House is set to release its first policy report on 30 July. That's tomorrow. This is a big moment for the U.S. crypto industry as the report comes after 180-day review under Executive Order 14178. It replaces older Biden-era rules and under a clearer approach under Trump administration. The new rules could change how crypto is seen in the U.S. and even influence other countries. On the same day, we'll get in the FOMC meeting tomorrow and is expected to maintain its current interest rate. Any signs of a softer stance could spark another rally in cryptocurrency and stocks. A new rule book for crypto basically coming our way. Bitcoin may become a national asset. The most exciting part about this talk is a U.S. strategic Bitcoin reserve. Government may officially use the nearly 200,000 Bitcoin it has seized to build this reserve. If this happens, Bitcoin would be treated like gold and seen as part of the U.S. financial system. Crypto impact. This could be huge for the crypto market. Clearer rules will help companies grow and make it safer for regular people to invest. If Bitcoin becomes a strategic asset, it could trigger a big rally. And with other countries likely to follow the U.S. lead, this could start a whole new phase of crypto worldwide. OC, your thoughts on this, bro? Because this is coming tomorrow. What are we going to see with this? How is the markets going to react? Is it going to be just be another volatile day? Are people going to get shaken out and we drop down to the floor? It goes to zero. You heard it here first, folks. What are your thoughts, man?
I think we're going to have a little bit of volatility. As far as going to zero, I don't think that we're going to zero, but absolutely. I mean, it's not that we're going to have some panic, but people are going to be being fearful out there, right? As always, I believe that we're going to have a bounce because, well, I think a partial fear has already been factored in. That's why we're seeing all of the markets correcting. So I don't really think that it's going to be the doomsday or anything like that, but absolutely it's going to have a big impact throughout the days, especially throughout this week, I would say. But not, I mean, but other than that, it remains to be seen. We need to look at the charts and start looking for key supports because throughout, let's just say yesterday and today, we've been getting closer to some essential big supports, right? We're not there yet, and I'm counting with this because I have some open shorts. But yeah, but other than that, yeah, we need to wait a little bit more and see.
Yeah, absolutely. I agree. Someone up there, Fairy Godmother, Gen X Fairy Godmother, asked about laddering into the alts, and I wanted to address that. If you're spot buying your alts, I mean, we put out our weekly DCA report in our Discord, so you have access to that. I believe you're a member. I'm 100% sure you're a member. Well, I guess I'm not 100%. Yes, you are. So you have the altcoin DCAs in there. That's what that's for. It's for spot buying. What I'm talking about are people that are leveraging into their alts, thinking this is it. We're ready to moon. Alt season is here. Bull market, full blown run to the upside, and then they're getting wrecked on that. And so that's where we're seeing, $500 million in liquidations every time it flip flops back and forth. So looking here at the heat map, OC, we were talking about those liquidation levels. You can see here down at about 117,000, we have a pretty big heat zone. But here's that $120,000 range. You see that right there? That is a hot zone right there. I want to see what it is, though, down at about that 113. So let's go on with like a weekly, and let's see if that pulls it in. And then I want to go look at this article that's talking about the short calls. Yeah, 114. Yeah, look at that. Billions down there between 113,800 and the top side on that 114,550. So there's that level you were talking about on that 113,000. But yeah, over $1 billion in Bitcoin short liquidations are positioned above $120,000. More than 1 billion in Bitcoin shorts positions are at risk at $120,000 mark and will get liquidated there. Recent data shows dense clusters of leveraged shorts between 119,500 and 121,000 across major exchanges. If Bitcoin's price breaks this resistance, it could trigger forced buybacks exceeding $1.1 billion, fueling a rapid price surge. Analysts highlight $120,000 as a critical short squeeze zone. So, I just saw Gen X. Is it easier to get 120K? Let's go look at the percentage here on this chart. Let's refresh it and make sure we got the most recent data. put it on the monthly. There we go. And let's look at Bitcoin. Right now, Bitcoin is 2.2% away from the 124.91. It's 2.9% away from the 114.477. And this is going to be your max short pain. So the level that shorts will get the biggest liquidation hit is 120,491. The biggest level of liquidations, max painful liquidations on longs would be 114,477. So right now, 2.9% distance to a 2.2% distance. I would say it's harder to move up 2.2% than it is to dump 2.9%. That's why you see bulls go up stairs and bears jump out windows or take elevators. So a little bit easier to sink a market than it is to climb a market. Climbing a market requires more liquidity, right? So, but speaking of liquidity, there's other ways to do that, right? Leverage. I want to talk about this. We talked about this yesterday in our Discord group, but I want to bring this up and talk about this with you guys because this is actually a little concerning, a little concernicus here. Margin debt. This came out yesterday, guys. This is talking about TradFi, but we know that TradFi does translate over to crypto. So let's talk about what's going on right now in the markets. Margin debt just hit $1 trillion. It's the highest level in history. That's more leverage than at the peak of the dot-com bubble or the 2008 crash. This is the most dangerous signal in markets right now. Margin debt surged 9.5% in June to a record high. So margin debt is the total amount of money that investors borrow from their brokers to buy stocks. This is the equivalent of I'm going to do a 2x leverage. So if you do a 2x leverage, you essentially borrowed the same amount of money you put into your trade. So if you put $100 in on a 2x, you borrowed $100, right? If you do a 3x, you borrowed $200. It's now 33% your money, 66% the exchange's money, right? So if you put in $10,000 of your own money, you borrow another 10K from your broker. You're now on a 2x, first of all, and you control $20,000 worth of stock. You understand? So when you see people, when you see these numbers pump up and people say it takes liquidity to do that, you can get there with leverage money too, right? But it's a very shaky price growth. This is called trading on margin or trading with leverage, as we call it in the crypto space, and it cuts both ways. If a stock goes up 10%, you make a 20% return on your own cash because you have the other money working for you also. But if it drops 10%, you lose 20% of your money. If it keeps falling, your broker forces you to sell. That's what's called margin call, okay? A margin call happens when your investments, this is also AKA a liquidation, margin call happens when your investment falls so much that your risk, that your broker's risk gets too high. They don't ask politely. They just liquidate your holdings automatically. This creates forced selling. And this is what I'm talking about on this liquidation, on this liquidity levels that get us up there on liquidation, guys, because this is what translates very easily over to crypto and the leverage markets that are propping up some price action right now. They don't ask politely. They liquidate your holdings. This creates forced selling, which leads to lower prices, triggering more margin calls, meaning you start to get liquidations, they trigger, it causes other liquidations, and then it's an explosion effect. We saw this with Terra Luna. We saw this with FTX. There's these moments in time where the price sell-off creates a vicious feedback loop, as it says. Coffee break. And so when margin debt spikes across the system, it means investors are piling into the market with borrowed money. That usually is interpreted as confidence. They borrowed money. They must feel pretty good about it. But when it spikes too fast, it signals something more dangerous called speculative euphoria. This is the opposite of optimistically cautious. Okay. Here's what just happened. In June 2025, margin debt surged 9.5% in 1 month, the biggest jump since November 2020. Year over year, it's up 24.5%. Even after adjusting for inflation, margin debt is at its highest level since December 2021. Okay. That's not optimism. It's a red flag. This has always been a warning signal. March 2000, margin debt peaked. We had the dot-com crash. July 2007, margin debt peaked. We had the housing crash. October 2021, not too long ago, margin debt peaked. We had a 2022 bear market. Each time the blow up came months later. Today, we're back in that danger zone. And it's a mirror of 2021, but with even more leverage and less margin for error. Okay. Why is that? That's because of how much people have in dry powder. And so let's zoom out and take a look at the long-term trend. Since 1997, margin debt adjusted for inflation has grown 381%. The S&P 500 over that same period, 289%. The market isn't just rising, it's being pulled up by borrowed money. That does not mean short everything. There's time on this. Time, okay? Don't be reacting until I wrap this up at the end. Some analysts even invert margin debt on a chart to see how it diverges. So when a gap widens, it means that price gains are being driven by leverage, not fundamentals. And right now, the divergence is extremely wide. P&E on stocks is at one of the highest levels we've ever seen. Thank you very much, Alexander G. I appreciate you. With the bless you. Now, here's something even more sobering. Let's talk about investor credit balances. This is your dry powder. This measures how much dry powder investors have left and how much cash and credit remain after margin debt is accounted for. It's like checking your gas tank before a long drive. As of June 2025, that credit balance is negative $621.8 billion. Yes, negative $621.8 billion. That's the lowest on record. Investors aren't just leveraged, they're overextended. There's nothing left in the tank. So historically, that has always preceded a market top. 2000 investor credit balance bottomed, market peaked 6 months later. So the investor credit, how much dry powder, it bottomed out, right? We don't have any more. We're out. And then the leveraged amount, the market peaked 6 months later with that leveraged amount, right? 2007, same story. 4 months later, we had the market peak. 2021, 2 months later, we had a market peak. 2025, the peak and the trough happened at the same time, meaning the amount of leverage peaked high, new high. Same time, we hit negative 621 billion in dry powder, meaning they're way overextended. So the matters because the margin debt measures enthusiasm, credit balances show resilience, and then right now the resilience is shot. If there is a sell-off, there's no cash to cushion it. So the question, can I ladder in? The problem is that if it starts to dump super fast, you're going to want more dry powder because there's no people don't have money to buy off the liquidations, right? So when they get the margin call, they don't have more money to put in and lower that margin call. That's how you get crashes instead of dips, okay? So even worse, the data you're seeing is already stale. FINRA releases margin debt numbers with a lag, so it's a lagging indicator. So by the time you read investors are euphoric, they might have already gotten a margin call. It's delayed smoke alarm during a kitchen fire. But it's not just retail. Smart money is in it too. Hedge funds are running record levels with gross exposures that are 300 times greater than their assets. It's a market. If markets turn, these guys get hit first, and it's the hardest. And also, remember, leverage amplifies everything, but it makes bull markets feel like they'll never end. And that's where we are right now. It's what I wanted to talk about because we are seeing some very dangerous times. Now, why did I say don't go and sell yet? I think that we still have time on this market before we top out. But I think that when it falls, OC, the people that have been talking about Bitcoin, and I've even said it myself, that Bitcoin may only have a 30 to 50% pullback versus a 70 to 75% pullback in the crypto winter. If we start to get this crash effect from this overextended, over-leveraged, I don't know that would be the case. I think that we would see an even more profound crash and put us back in that 70, 75% and look just like we have every other year, despite the institutional buy-in through ETFs, right? So overall, do we look at this and go, you know what, dry powder is the most valuable thing right now? Or do we look at this and go, we need to get as much exposure as quickly as we can in the market for the run and then be prepared to quickly pull out, which then leads to the question, the final part of that question. will we have time to get out of the market on a crash? And let's talk about that because you've had that situation in the past, OC. So your thoughts on this, run with it, and then tell us why it's hard to get out of the market in a crash, OC.
Absolutely, because it starts a snowball effect, and it just sweeps down, sweeps down. And even if you do market entries or market outs, well, then it skips your entry or your market out, and it just keeps rolling out, and then
Or you
you're
get hit with
chasing.
a really bad slippage. Really bad
Oh,
slippage. Like I hit market sell at 120 and it sold at, $100,000. Like what the hell? Like that's slippage and it happens too. Yeah. So go ahead.
man, it happened to me. Like, hey, I caught the very top, and then you look at it, and nope, you didn't. So that was pretty bad. But I mean, first of all, let me get started with 70% retracement. Yes, please serve me 2 of those to go, because that will give me, I mean, enough chance. And we remember, guys, we have a very powerful tool, which is the MVP Oscillator, that has caught all of the bear bottoms every single time. So, I mean, it's not that the bear market is the easiest, but it's just more euphoric, to say the least, right? It's more alarmist. It takes people by surprise. So if you can just not even time it, but if you can jump in the wave, if you can early identify it with a, hey, range continuation down, well, at least, I mean, and you position yourself halfway down, you are doing fantastic. And then after everything is being given away, that means that if we retrace 70%, we need to come back up another 70% to hit another all-time highs, which means you
140%.
basically the 100%. Yeah, you're completely right.
If you drop 70%,
So,
it takes 140% to the upside to get back to what it was at. Yep. It's double.
so that means that you basically had a 2025 reset or 2024 reset. So all over again, wouldn't you like to go back in time, not only have the benefits to short the bear market, but position yourself in a better way? I mean, I think for me that is music. And who everybody that was, hey, we're late to this, that will be an actual, like, hey, second chance. Just don't go in. Reject the price low when what was the price that you were after, right? So be smart about it. Use your tools and act accordingly. Other
Mhm.
than that, what is it so difficult to get out into a dropping market? Because how fast this plays out. And remember, you're acting against a machine.
Minutes.
Right?
Minutes.
Yeah.
It's like 5-minute candles will look like daily candles. It's like
Holy
it's quick. It's
yeah.
quick.
It is very quick, right? And also remember that they're piling up out of sales based on the liquidation. So it's not like you liquidate a small portion and they liquidate in chunks. So you'll see a spike going like that, and then retrace it and back again, and retrace it and back again, and it retraces. And it's just so hard to follow along. It's not like jumping into a bullish trend where it is actually slow, despite you have that gold candle, but slow and steady. It is like crazy. And finally, with that, what was the last question? The last part of the question
No, that was
you
it.
mentioned?
That was it. Oh, should we be aping in, trying to get as much of these gains as we can right now, or should we be more concerned about positioning ourselves for the crash? You know,
I
should we
mean,
try to make as much of the
yeah,
gains as we can before the crash, or should we try to be positioned for the crash, meaning dry powder on
I
hand?
absolutely. I think that neither. I think we need a balance right now. I mean, who would like to buy the top? But again, is this the top? Yeah, we need a balance. Absolutely. And if this is like, hey, do you really have big risky positions and they're in profits? Cut them out, right? And this is not financial advice by any mean. And then find a balance. Like this is for me, and we talked about this. I believe that this is not the time to start DCAing, right? Despite I said, if you haven't been DCAing, start now, right? Start now, start right away. And it was what it was it? 2 sessions ago, or even Friday. Not
Mhm.
100% sure, right? Where is it the wristbands right now? Are they telling you to DCA in, or are they telling you like XRP, which by the way, right now it's in the floor? Yeah, exactly.
Yeah, because it told us last Monday, over a week ago, it said take 50% profit out of your XRP. And if you had done that, you'd be much happier than you are right now with the sell-off. So
Yeah, so I think the balance will be no DCA for now, and then if you have some big risky movements, start cutting the taking some profits or cutting or scaling out of those, and then start trading this area. At the end of the road, trading if you do it correctly, if you have a stop loss, if you have a limited amount that you are pushing in, and then you control your leverage, well, then you're just risking a portion of it and also playing with leverage, right? Which again, it's not that I recommend leverage, but I will be just hypocritical if I did say that, hey, I don't recommend it, but I don't use it, because I do use it. And I think everybody that knows what they're doing should also be using it, right?
yep.
Because you're duplicating your position or your money power without risking it, but you're putting at risk half of it or however X you are using on that leverage. So a balance should be right now the way to go, I would say.
Robert Mulligan. Yep. He said, is that the reason you guys keep stressing have a way out? Yes, absolutely. I do not go in anywhere without knowing my exit plan. Part of that is PTSD, combat PTSD. Part of that is because it's a smart move, right? In the markets, you got to treat them like a dangerous combat zone. You're going to have some winners, you're going to have some losers, there's going to be some casualties, but our goal is to make gains, accomplish the mission, right? At the end of the day. So the best way to do that, have an exit plan, right? Always have an exit plan into anything you get into. Always use your risk management. Threat mitigation saves lives. So everything I needed to know about being in the crypto trading space, I learned from the military combat zones. Okay. Let's talk about why it doesn't matter. So my opinion on this, OC, is I would rather have dry powder than to push it all into the market to try to make as much of the gains as I can ahead, right? And the reason for that is because I don't care so much about riding it out to the top and catching the top. I care about catching bottoms. That's where all of my money is made, guys. I don't make it from holding it to the very last, being the last guy in the room, going, "I got it, I got the last piece," right, and then walking out. I got all my money from where I bought in at, not where I got out at. So, pushing this into some charting here, it's this indicator right here. This indicator right here. I'm looking at Bitcoin on the index on a monthly chart. Check it out. Go back here. This is 2015 here. You see, we get this, like, it's a different shade. There's like these grayed out shades here, and then you get this one that says, "Hey, it's coming." And then 1 month later, we start getting bright candles. Guys, if you buy on those, you would have been buying at these levels here. Okay. And your average would be right here, about $256 for that entire run up, by the way, that went all the way up into like 20,000. Okay. If we go, we look at the next cycle here, we had 2 months of it. So you do 10% in, 10%. And by the way, each one of the bright green candles, you buy 10% of your dry powder in. When there's no more, you push the rest in. Back here, we would have gotten 20% in. There's our warning candle right there. We buy, the rest of it goes in. Our average price here is about $3,900. It rides all the way to 69. Okay. And then, hey, appreciate that $1.99 super chat there, Papa G. I appreciate you, man. Much love. You didn't have to do that, though. Seriously. I appreciate you. Look here at 2021. Again, we get this top, bottom, bottom, top, bottom, bottom, top, equal, and then our last one is there. Our average price here is about $21,400, $21,500. This is what I positioned in, and it runs all the way up. So I don't need to catch the tops. I don't need to ride this all the way up and keep myself exposed in danger zones when I have the power of Chart Prime giving me how to get in on the bottom levels and ride that up, right? And so it's not about how long I'm in, it's about where do I get in. And this is it's the weapon. It's the weapon, man. So that's going to be, what is the name of that Chart Prime indicator? You always forget. It is the MBP oscillator, Mike Victor Papa operator. and it is the Oscillator. So here I'll show you. You go into your Oscillator Pro Plus, and you click right here at Oscillator Select, and it's the MVP Oscillator, and that will pull it up, and you look at it on the monthly. By the way, it works great on dailies too. Let's go back and look at the daily here. Load in for me, please, good sir. And you see there, look, bright green, had a little upside move there. After that, fired. That went up another 7%. Look, we had this whole bottom here that hit. That was a move up on the daily of 10%. Go back here, bottoms. This thing works great on daily. Put it on the weekly, it works there too. But the monthly is where you buy the bottom of the market. So that's where you dollar cost average in with all your dry powder. Let's go back and look at the weekly here. Weekly. I mean, there's little moves up. So mind you, it went further down, but that's why I use the monthly for that. But if you're looking to use it for trading, it works awesome. So you're welcome, Trade Intuition. Crypto Farmer 24. I see you there, man. MVP Oscillator. It's gonna be how we as a community are buying the bottoms of the market and riding it all the way back up next time. So that's why I'm cautious. It's not because I'm saying, hey, get out early and don't make those profits. We're gonna make our profits by where we bought at. Not where we're going to be buying when the massive fear is in the market. Oh my God, it's going to 3K, right? No, it only went down to 16K. We averaged in about 21K, and we wrote it up to over $100,000. That's where we're going to ride this to. So, overall, guys, at the end of the day, be cautious when you get towards the end. Be very bullish when we're at the beginning and everyone is saying it's going lower. We're just going to rely on MVP Oscillator, and the alumni are going to make some cash moolah. So, OC, what do you got for us on the altcoin side right now? How are we looking on those markets, bro?
Absolutely. So we have a couple of things moving here. Let's take a look at the crypto bubbles. Everything is looking mixed, but mostly red. All right. Let's take a look at Fcoin, Bonk, and CFX, because CFX is something that we can absolutely be trading. This is not going to be a serious trading, like, for example, holding SUI or anything like that. We're trying to extract money out of the market. All right. So let's get started first with Pingu, by the way. So let me right click in here. Let's open up in here. Oh, I already had it. This is it. And Pingu, we're coming to a support area, but this is something interesting. If you take a look at the pattern that we have in here, is a sharp recovery and then a rounded bottom in here, or rounded top. If we remember here, we have something called Adam and Eve. And then if we just turn it around, we have an Adam and Eve, or a bearish Adam and Eve, right? So that signals a movement or a pattern going lower. So what is our neckline? Our neckline, it is right here, where all of the confluence is at, all right? But something interesting is that we're almost peaking downwards in here, where we have flip of the ribbon zones, right? So far, should we be shorting the pattern? No, because it have not yet broken. So far, where was our entry? Our entry was at the high order block, losing this area, losing the zero line. That was your entry all the way down to your dynamic reactor. But so far, we need to give it a little second for it to break, because this is already chasing after a price. And I mean, there is a real danger for us to bounce like that, and then something happens like in here, which could be liquidating us, or hitting our stop loss, or anything like that. So we need to give it some time. For me, what I'm going to be doing is just extending this line, making sure that it's straight, and then I'm going to right click, let's lock it, and once again right click, and let's add alert. I want to be alerted on Pingu, and that is because, let me show you, I mean, if we're bearish, guys, come on, this one could be a very nice run to the downside, especially if we start breaking some highs in here, and we're making a ginormous head and shoulders on the daily. But look at that. I mean, if we're able just to retrace 50% from what we gave up, I think that will be fantastic, phenomenal. So let's go back to daily. And that is because, look at that, the first thing that we got, it is this hiccup in here. That will be our next big support. That is around 0.34 and 0.29. But if we do our poor man's Fibonacci tool, there we go, all the way up, our 50% comes at 0.27, and then our 33% comes in line, there we go, for what we're looking into, somewhere around a 0.35 or 0.30 whatever, 35.7, right? So once
And
again, I'm adding that.
I would say on that, OC, I would say on that if we are going to see a pullback to there, you got a fair value gap sitting right below it. Will probably wick even further into that fair value gap. So
you are correct. I mean, I did not notice, but yes, that is a most likely fair value gap. So we could be even looking at something like that, maybe a little lower. What we can do is easy peasy. Just turn on your indicators, look at for your ranging zones. There we go, and your
and a volume gap, and a volume gap there.
Oh yeah, and the volume gap. Love it. So yeah, I mean, I think we have a very nice run to the downside, especially because on daily, look at the compression at the top, right? And we're about to break. So man, I think I'm getting excited because shorting meme coins goes way better than longing them. You believe me? Oh yes.
Target locked. Ready to fire.
Love it. All right, so let's be a little careful. Let's not let's keep the eye on the ball because this is Pingu, and Pingu has shown that it has a lot of people backing it up. And well, then we're also gonna be going against straight up Alex O Crypto's favorite pet coin. So there'll be something that we need to look into it. All right, going into now, once again, the biggest one in here, right? The biggest fart in the room, which is Fcoin. Fcoin, it feels like already we have lost the opportunity. We're going all the way down here. In fact, I'm feeling like I want to long this. Still needs to be still remains to be seen because in the daily, I mean, we are creating a double top. Where is our area of entry or our neckline? Somewhere around here, very close to where we are right now. Let's go back to daily. And I know daily is a little far away, all right? But we're looking at potential drops or dumps that could be really worth it, all right? So in the flip side, going for a possible long is not there yet. Yes, we're going to dynamic reactor right here. Let's add an alert on that dynamic reactor. And also let's add just a line just so we know that we are on that dynamic reactor ballpark. So let me see if I can get it. Perfect. And then just, let's just add the alert to it. Why not? And then just let me know is just a little bit above. What I'm looking in here, it's for the flip of the ribbon. If I see that flip of the ribbon, I'm going to be trying to catch a long like this, all right? Look at how we're coming back down to your dynamic reactor, and then we had a, in this case, looked like a dead cat bounce, but we ended up making a double top, right? So I'm going to be looking for the same thing happening here, going back to these areas right here. Why? Because we peaked. And also, if we take a look at our VRVP, there we go. We have some smart money entries around those areas and some smart money entries again around those areas. So looking for that middle zone. And then looking for those predictive ranges. And there we go. We have, again, very close some predictive ranges to be looking into. So far, that's what I'm going to be looking for a further continuation and also a breakthrough that neckline. Yeah, what's up, Piper?
We're at the top of the hour, bro.
Oh, all right. One more, I promise, because I get the entry today. Cake, guys, cake is playing out. Let's just wait for a couple of more minutes. Just candle close. And then, well, I think with our target, our first target, TP number one, and let me just move this to TP number one, is going to be around 272. That's it. We called this out at the beginning of the show. So guys, if you say this, boom shakalaka. There you go. So make sure you move your stop to entry as soon as possible. And all yours, Piper. Turning it back to you, my friend.
Awesome. Tomorrow we're going to jump into this. We didn't have time to do it, but I want to have this conversation tomorrow. Many high earning Americans don't feel wealthy. Here's why. Tomorrow I want to have a conversation about how much money would you need to make per year, whether it be through income, passive income, your earnings off of investments, whatever, in order to feel wealthy. We're going to talk about that tomorrow. Also, FOMC day tomorrow. We've also got that economic data coming in tomorrow. Where is that at? Go back there. Let me check. Tomorrow we're going to have GDP rate, the first report on GDP for quarter two coming in tomorrow, expected to be higher, so that might give us a little pump. And then 2 o'clock tomorrow, guys, FOMC rate decision. 2:30 tomorrow Eastern Standard Time. Jerome Powell's going to be speaking. Catch us tomorrow morning, 10 a.m. Breaking all this down for you guys and talking about that article. How much do you need to feel wealthy? So also, don't forget to tune into OC Guy. He is cranking out Trade Live with OC at 8 p.m. Eastern right here on Piper Academy. And then tonight at 11, watch Lunar Beaches Crypto for his final week of Mad Markets After Dark. Tomorrow morning, BC Port Corp will be back with Good Morning Crypto. Yeah, you didn't know that, OC? I'll tell you later about it. He's got a baby coming, man. He's got to have some more flexibility time. So I totally get it. Shout out to LBC. Much love, man. Guys, we'll be back tomorrow morning, 10 a.m. Eastern Standard Time, bringing you guys the news, the charts, the markets, the headlines, the macro, and everything you need to have knowledge, because knowledge is profit. Until then, guys, peace, love, and profits. Catch you guys later.
We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels from. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul train ready. What a line from OCI, from a Mexican spaghetti, yo. Crunch crypto with a deep dive to reject dime. And if you like the visual powered by Chart Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels low. Sound off to get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my love now, you know what I mean. You can't handle the truth.
That was awesome, dude!